Hey everyone, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. I've got a great one for you today. This one is for the gamblers, the ones who like to take risks. So, people who gamble spend upwards of maybe $100 a year to maybe $10,000 a year at a casino playing slots, cards, etc. But what about if you invested in the casinos rather than gambled at the casinos? So I'm going to show you guys what that looks like over a longer period of time and what that means for you, your wallet, and the potential benefits. So if you're new here, we talk about chart analysis, fundamental analysis, um, technical analysis, which is part of chart analysis. We have a Robinhood challenge that I do, $25 a week. And I show you basically how I find companies that I invest in. I have a video that has all my screeners as well, so you can find these companies for yourself. So without further ado, let's look at the ticker symbol BJK. This is the Van Eck Gaming ETF that holds several casinos, not only in the US, but China, London, etc. And see if you are better off buying this ETF or gambling. Let's go. All right, you guys, we are looking at ticker symbol BJK. This is an ETF that holds most of the major casino names you can think of: Wynn, Caesars, Boyd Gaming, etc. I'll show you all of the holdings so you can get a better picture to see if these are casinos you would gamble at or you'd want to invest in. So looking at this chart going back to all the way 2011, 2011 price was $25.50 and today's price is 46. If you would have purchased this stock in 2013, in September 2013, you would have made little to no money. However, you would have made money on dividends and you would now have a long-term capital gains rate. So, do I think this this area of purchasing makes sense? I think yes. Just because historically it's always bounced from around 23 to 57 and now it's at 44, which is conveniently almost right in the middle of those two price targets. So, this stock, this ETF, has a 0.36% dividend. Remember that. And we're going to be conservative and say that the stock rises about 5% a year. And if we look down over onto the right of the screen, which you guys cannot see, we have the performance for the year, like 1 year as of today. So last April, today is at 20%. And then also from January 2023 to now is at 20%. So we're just going to say 5%. So remember the 5% share growth and remember the 0.36 dividend, 3.36% dividend. All right. So now let's take a little bit closer of a look into this ETF. So right at the top, we have Flutter Entertainment, which is a London-based gaming casino corporation. We have Las Vegas Sands, Evolution AB, Vici Properties Inc., Galaxy Entertainment Group Limited, Aristocrat Leisure Limited, MGM Resorts International, Sands China Limited, DraftKings Gaming and Leisure Properties, Wynn Resorts. We have Entain PLC, Churchill Downs Incorporated, Lottery Corporation Limited, Caesars Entertainment, La Française des Jeux SA, Genting Singapore Limited, Boyd Gaming, Light and Wonder, Greek Organization of Football Prognostics, International Game Technology PLC, Penn Entertainment, Melco Resorts and Entertainment, Genting BHD, Playtech, US dollar, so they have the US dollar as 1%, Genting Malaysia, Sankyo Corporation, Kindred Group, Kangwagon, Wynn Macau, Tabcorp, Haywa Corporation, Star Entertainment Group, Naga Corp, SJM Holdings, and Sky City Entertainment Limited. So basically, these are all giant casino gaming corporations that you can invest in and you can also gamble in. So, my question to you, does it make more sense to gamble at the casino or invest in the stock? Well, luckily, I have this handy dandy spreadsheet and we're going to take a peek. Let's say you put $10,000 in 2023 and every year you spend $10,000 at the casino or you put $10,000 in the stock. The dividend yield, remember, was 0.36 and the annual share growth was a conservative 5%. So, looking here, if we put $10,000, oh, this is at 0.36. Yeah, this, one sec. This needs to be percentage, and it's going to be 0.36%. There we go. So $10,000, let's say you're putting in a casino or you're investing in it. And then every year you spend $10,000 at the casino or you invest. So if you're 33 and you put $10,000 away this year, 2023, and you put $10,000 away every year investing into the ETF BJK, at 67 when you retire, you will have $973,000 in your portfolio. Now the dividend is only going to be $3,500. So at that point, you could switch it from a 0.36% dividend and switch it to like a 7, 8, 9, 10% dividend. If you're getting 7% on 973,000 times 0.07, you're getting $68,000 a year divided by 12. You're getting $5,675 a month. Okay. Now, if you're going to a casino and you're spending $10,000 a year until 67, you're not saving any money, but I mean, you're increasing your odds to potentially make money and you're giving yourself entertainment. So it's a balancing act there, I guess, depending on your priorities. But if you ask me, the clear winner is if you invest $10,000 into the casino, investing in the casino and not gambling. What if you wanted to do 5,000 investing into the casino and also 5,000 gambling? Let's see what that looks like. So let's do 5,000 investment. Whoops, 5,000, and then 5,000 every year. So you're going to use the other 5,000 to gamble for play money, and then you're going to put 5,000 to actually buy this ETF. So going down to 67, we can see right here, that'll put us at $486,000 portfolio with a dividend of $1,752. Again, you can move that $486,000 into a higher paying dividend if you want to get more money for your buck. So within your brokerage or IRA, however you're paying for this, you could do 486,755 and you put it into a 7% dividend stock. That's $34,000 a year divided by 12. That's an extra $2,800 a month. And if you're putting it into a Roth IRA, you are not paying any taxes on that. I have a whole video on that. Check it out. If you're a gambler, check it out. If you have time, if you have an investment timeline of, 20 plus years, check it out. So, now, what if we wanted to invest in like Boyd? Let's just say Boyd Gaming. I know they do a dividend and they're a stellar company. 0.94% dividend. So we're going over here. We're going to go to 0.94. All right. Going down to 67 years old. Our new portfolio balance is, you guys can't see it, 550,000 with a dividend of 5,171. Again, at 550,000, change that over to a higher paying dividend. That could pay for your, gosh, by then, I don't know, 2057. I don't know what that money's going to pay for. Food, cell phone bill. But let's say you're not going to do 5,000, you're going to do 10,000 because you are dedicated and this spreadsheet has changed your life. $10,000 this year, all the way till you're 67, maybe longer, maybe shorter, depending on how old you are or your time horizon. Into Boyd Gaming, and let's say Boyd Gaming appreciates 5% a year. They went from $5 to $70 within 2 years, so hit or miss, whatever. We're just going to go 5%, very conservative. At 33, I have 10,000 in. I'm expecting a less than a 1% dividend, but at 67, you can see right here, I have a $1.1 million portfolio and I'm getting $10,000 a year here. But again, at this point when I'm 67, I'm going to go from Boyd Gaming and I'm going to go to something that pays a dividend, like a higher dividend. There's tons of stocks. Look at my other video. Realty income, whatever, anyone. So let's do 1,100,000, and let's say I'm in a stock or a fund that pays 7% times 0.07. That's, I did something wrong. I think $77,000 a year divided by 12. That's an extra $6,000 a month. I could then gamble every month until the day I die with that money. I mean, I wouldn't, but I'm just saying. But you have to pay for other expenses. I'm just saying that's the power of compounding. And if you ask me, I think you should be investing in casinos and not gambling. But do what you want. It's your money. Maybe do 50-50. I don't know. I can't. I'm not your boss. I'm not your dad. So with that, I hope I changed your perspective a little bit. Maybe you have some questions. Post them down below. Send me an email. Yeah, the power of compounding is amazing. If I'm 83 and I'm still adding in $10,000 a year, I'm at $3 million. Whoops, 3025. $3 million times a 7% dividend. That's $211,000 a year divided by 12. That's $17,000 a month at 83 if I stick with this investing schedule. So yeah, power of compounding, my friends. And again, if I have a dividend yield stock here that's like 7% and my starting principal is at the 3 million, that's 30 million. At the 3 million, there we go. Again, yep, 210,000, which I just showed you on the calculator. Again, so again, it's amazing. Always reinvest your dividends if you are doing that. But yeah, I wish you guys luck. Let me know your thoughts. If you made it this far, please like and subscribe. Talk to you later.